Good day, fellow investors. Let's do the standard YouTube portfolio update. We have a lot to discuss today. So just to note, this is a YouTube educational portfolio started mid this year, and we started with 1 million demo account on Interactive Brokers, which is a broker that allows us to buy stocks globally, and we try to learn about stocks globally. And the goal is to follow 20 businesses, learn about them, the fundamentals, and how those fundamentals impact the stock price. And by following 20 businesses, following especially how what happens in the market impacts the stock price, we can find those overvalued or undervalued situations. We can nail the right time to buy something, the better time to buy something. You can never know when it is the absolute bottom or something like that. And the goal is to, over time, compound knowledge, compound research, compound ideas, mentality, and hopefully it will give you a better, improved risk and reward perspective on the 20 businesses we follow and on how to manage your portfolio so that you reach your financial goals. So let's dig immediately into the portfolio. So it is even in positive $39,000. We started with $1 million. We are now 1,049,000. That is something in line with the stock market, I think. So nothing spectacular there. Of course, we just started. But let's look immediately position by position. So Warner Bros. Discovery, we bought some here. I think the position is a little bit down, 25% down now since I made the first transaction. And this is already interesting to think, okay, is it time to do the second buy? Well, let's see what has been going on. If we look at Warner Bros. Discovery, it's always good to find information. Just go to Seeking Alpha and you have the news, you have what analysts think. So if you read all these 20 reports, you can get pretty good info about stocks. And if you want a discount on Seeking Alpha, 60% or something, you can check the link in my description below. So what happened? Of course, again, bad earnings, and the stock went down another 15% as analysts have mixed views. What do analysts say? Well, some analysts trimmed their price target to $8, thus further down, because advertising challenges and then no outlook on how will the CEO turn this thing around. However, other analysts are much more positive, but still worried about the leverage and the guidance to 2023. Of course, we are looking at this as an oversold company from AT&T dividend holders, and now we have to see whether it is value or not over time. This analyst has a target of 13 to 66. Other analysts still have targets of $36 if they reach the targeted cash flow. So we will see about that. They are pulling forward the streaming business, so that should do well. And then we'll see how the pivot goes over time. So I think we could add more to our portfolio. We have added 30,000. I have bought 30,000 the first time, and now the stock is significantly down. So if I add another 20,000, and then if it goes to 8 that analyst said, we can then add another 20,000. So 2,150. Let's see if I double my position. That's a bit too much. 2,000. Okay, let's take it a round number, and I submit, and the trade will go when the market opens. So Warner Bros. Discovery, the risk is there. Of course, they might not turn around. There is huge debt that will always pressure. If you don't turn around something, then the debt starts pulling everything down, and that is the risk and reward. I wouldn't personally be investing in this, but in such a diversified 20 position portfolio, it looks like value, and then you simply see whether you can ride it out or not. Another buy if it goes another 25% down, and that's then it. Next position, Rubis. So our French company, the dividend is still 7%, still there, money making, unlike petroleum business distribution. So nothing much happened over time. There was a short jump, then down, but stable. And I'll update on this when the annual earnings come in. Boring, stable business just to watch over time. Next one is Newmont, and I think I made already 2 purchases here because I bought first one here. This is the all-weather Ray Dalio gold strategy. I bought here, then I bought as it went down more. And now if gold goes back here, then I will sell it. It still didn't get there. It is a little bit higher from the second buy, but if it goes back here, then I sell the second buy, the lower buy. So over time, you have an all-weather balanced strategy, and you even get the yield from the gold part of your portfolio. So this is for those who want to follow gold. As said, personally, I don't own it because it is an okay strategy likely. It's a good strategy. Ray Dalio always promotes it. So why not have it in our portfolio? So we have done this. Meta platforms, we have just discussed it. We have increased the position in a recent video. The links to all the videos to the playlist will be in the description below, so you can always check it. And we know the risk and reward. If people keep on watching Facebook and advertisement, and then the metaverse picks up, everything will be well. If people go away, advertisers go away, and metaverse becomes nothing, then it will be bad. That's the risk and reward. Next, the Crane shares, China. This is the profit of the portfolio as we nailed the bottom when it was clearly oversold in panic. So Crane shares, ETF, I said we can follow China. We bought somewhere here when it was truly oversold. When you see those panic headlines, we discussed this in a video, I'll put in the link in the description below. Well, we took the risk, and now a big risk with 10% of the portfolio in this case, and now we are already significantly up. So this goes in line with the educational strategy. Now, the question is 30% up. Should I sell or should I hold? And I think as we are here as long-term learners, educators, understanding the risk and reward, of course, the risk is now higher than it was a few weeks ago, and the reward is mathematically lower. But if things ever return to the past, then it's just a small blip here. So why not risk further and just simply hold it? And then when it comes to exuberant values, then we might consider selling something. That's usually how I invest. Intel semiconductor cycle, bad earnings again, declining everything, but the stock has rebounded over the last month following the rebound in the market. So it was at some point, every stock that falls is clearly oversold. So here 50% down, it was close to book value and therefore oversold. So for Intel over the long term, it looks still pretty cheap, 123 billion the market cap, and if they can return to growth, then this could really go forward and in line with the long-term trend there. So oversold, and then we'll see how it develops over time. And from a risk and reward perspective, still attractive as it was over the last months. Then the next one, Google. So great business. We calculated that potential returns are around 10 to 20%. The stock is still close to where I bought it. Of course, there was this big dip from when I bought it, and then it went 20% down, but that's investing. You never can nail the bottom, as I said earlier. Sometimes you nail it, sometimes you don't. But if you're buying value at a certain price, then if it's here, the important thing is that over the long term you end up positive. And whether it is a 20% return immediately or a longer term 10-12%, well, something has to be left for luck, especially in these diversified portfolios. Devro, the sausage company from Denmark, doing practically nothing. It will pay its dividend, so we will update an annual earning. So these small caps are there to be there, and you just own the business. Berkshire, the fortress, it's even positive, so the market really likes it. And the stock is still relatively high. The market cap is 676 billion, which means that it is still, for me, overpriced. The earnings came in, they made again their 5-7 billion, so we'll likely make 20, 30 something billions, 45. Price earnings ratio adjusted of 20, sorry. And that's then the investment for Berkshire, too expensive for me. And therefore, if you look at our positioning, the position is just 10,000 and it is already up 10% since we bought it. But we said Berkshire is lighthouse of the portfolio. It's an investment fortress, and therefore it's always good to have it. And similarly also with Apple here, so I can do that again. Just look at the low exposure. We said if we buy a great business, we buy it. If it goes lower, we buy more. That for Apple and for Berkshire isn't happening, and therefore those are the lighthouses in the portfolio. Next, a recent buy, Amazon. So it went up in line with the market. Just watch the video on that one, nothing to add. ADM, Archer Daniels Midland, so stable there, went up immediately after the buy. It was, I think, was the first buy of the portfolio, and I think it is a great business, essential business, food business, but now it is a little bit overpriced, so I'm following that. When it goes lower, I once made a video, I think it was about 40, then when it goes to 30, it's a great buy. It actually went to 30, and that was, of course, a great buy for such essential businesses, but good to have it here in the portfolio and to follow it. Now, speaking of risk and reward, we know that Activision should be taken over by Microsoft at 93, now it's 73. If that deal closes, that's a 20-something% return over the year. It's very likely that it will close. Twitter closed, but if it doesn't close, then you go here down. So it is a risk and reward that I personally don't like to take, so I won't add it to the portfolio, because if I don't like it, if I am not following the strategy, why should I talk about such merger acquisition strategies? So just a note here that I thought about this because we discussed it in a video, but not for me. So I hope you enjoyed this short update. Nothing much to do. We added the position that was down. I will keep researching, keep doing, keep working, and hope over the next few months we have 20 positions, and then we can compete, add bigger, because the initial start was 30 positions, now 20, so I will have to increase the sizing of those positions in the portfolio, but we'll do that over time. I hope you enjoyed this. Subscribe if you want to follow, check the portfolio playlist for the video by video, and I'll see you in the next video.